Why did you want to do the CNAP course?
To learn more, because when I finished school, I did not have any idea about not-for-profit accounting.
I think it's a very good, informative fiscal course. It made me think more about how to present the functional expenses and what percentages should be program, what should be general and admin, what should be fundraising. That's one of the reasons why I came. I wanted to see what are the healthy percentages from one not-for-profit to the other.
I just wanted to go through to see if what we are doing is the same what is required.
I think CNAP was great. I took this course and I feel material of CNAP almost cover everything. So no matter you are accountant, staff accountant, senior accountant, or executive director, controller, everyone can get more knowledge from this course.
The certification itself, once you do this course, you get certified, and it gives you like competitive advantage to other people like in the same industry.
What about the board members then? They need to take a
Exactly.
course like this so they know what.
Board members, they need this course.
I'm in the process of learning this whole CFO position. I'm going to make sure that I know what has to be done as far as proper audits, proper way of reporting to the board, whose responsibility is to do budgets. I want to maintain a good policy and procedure manual. I have to devise that. So I want to be aware of what's happening. This was a great opportunity, a nice overview of the whole not-for-profit background.
When I suggest to agencies to get online banking, because one, with online banking, you could print your statement on the 1st of the month and have your bank rec done by the 5th. If you have to wait for your bank statement to come in on the 10th of the month, and you're trying to follow the concept of doing the bank reconciliation, there's not enough time to close the book. So that's why I like online banking. I like it because you can print the activity for the week and just make sure you got all the deposits, that nothing slipped through, particularly in the smaller agencies. But when I use the term online banking, I have some treasurers who are very upset and very concerned that I'm even suggesting that, because in their mind they're thinking some employee is going to empty out the bank account and wire the balance to the Bahamas. The online banking doesn't have to have external wire transfers. You should not allow external wire transfers through online banking. It's just to transfer from one to the other. Or even you can have online banking and not allow transfers, just inquiries. So I bring that up because if someone in your organization is concerned about online banking, get the information from your bank and show them that the inquiry feature is very beneficial, even if you don't end up transferring. And certainly you don't want online banking that would allow external transfers over, outside of the organization.
If I knew my organization was having a fundraiser, I would want to make sure that that information was readily available on the ticket, or a lot of times, even if it isn't on the ticket, I've seen in the thank you letter. Thank you very much for your contribution to our dinner of $100. The value of your dinner is $45. Timesheets is one way of justifying that. You have an employee that fills out their timesheet, and within their timesheet, they specify directly whether or not they're attributable to a certain program or where they're spending their time during the course of the year, the month, the week. So how many organizations have their employees fill out timesheets in here? Timesheets?
We just started.
You just started. And how, can you guys give me a little bit of an example of what your timesheets have on them, the employee timesheets?
Well, names, has the places where they're working, and the times that they spent in each location.
Okay. And the times that they're spending at each location, they're dealing with particular people, or can you describe your organization for me a little bit?
It's a mental health facility where we have various caseworkers going to and various programs. And one caseworker, her time may be allocated on 3 or 4 different programs.
Okay.
So her percentage of her time is based on where she's staying at that week.
Yep.
And how many hours.
Okay.
So a 35-hour week, if you're spending 10 hours on that, you get a percentage based on it.
If in your, the last page is a tear this off and send your contribution back, you need to talk to your auditors about how much that would count as fundraising. Anything in which you make an appeal, even if it's an informational letter, generally, but at the bottom you say, and if you want to support more of our work, you trigger a fundraising expense. The idea with allocations is to paint the truest picture of the use of funds within your organization. So if you're spending a lot on programs, you want people to know that. and you just need to be able to defend it. But what you're doing is you're telling your organization's story in numbers, and you want the most accurate picture to be able to be painted from that financial document.
FD methodology, allocation methodology. And I use that, and can I also use a direct cost
Yes.
within the same category?
Yes. So what would happen is,
But then wouldn't, you're using two methodologies
yeah.
for the same category?
Yep. You're using indirect cost allocations based on when you do not know where it applies. But if you know, the first question to ask when you get the invoice, do I know exactly where this cost belongs? And if you do, that's great. You're done. You're just going to apply it to where it belongs. But if in case, like the telephone expense example, one is we'll say we have two telephone bills. One is for a hotline. That telephone bill you're going to put to the program for domestic violence hotline. And so that telephone bill is going to go right, that's a cost of running that program. And you want to make sure that when your development is submitting proposals to get dollars in, that someone's covering the cost of running that hotline. But on the other hand, then you have telephone expense for the whole organization. That's where you're going to allocate. Some of the people in the domestic violence hotline area are using the phone for calling cases. Some of management in general, the people in those departments, human resources, they're using the telephone. So then that's the telephone bill that gets allocated across the board.
Falsified accounting records. That was the technicality, because the vendor's name, of course, that appeared on the system was not the true name, and the financial statements she was sending to the accountant to send to McDonald's were incorrect. So the actual issue was that she had falsified financial records because he couldn't prove that he hadn't authorized her to use the stamp. How do you prove that if she has it?
How many years?
6. Only because, it would have been 3, only because it was her second offense. Now, how did he not know that she had done this before? How many of you really know what people do when you interview them for the accounting department? Do you do criminal record checks? But that's the one place where you ask for a driver's license, a social security card, a passport. Think about the McDonald's story. And I say to him, you gave me great training material.
This person was not stamping the paid receipts. Every receipt that was, when he was paying it, it wasn't stamping it. So he was giving it to the accounts payable person who was told, whatever this guy does, he's fine, leave him alone because he's so-and-so's friend. So you lost control right there because of a relationship that you thought this person had with him. This person wasn't stamping anything paid. The accounts payable person was preparing the check for petty cash. This person was going to the bank, making this petty cash check out for one of our programs that didn't request it because he was using these dummy receipts. For years he was using the same exact receipt. It had to be 6 years, the same receipts, stack of receipts. And he would get the cash back in his cubicle, happiest man going, always a smile on his face.
Oh, he
right?
wasn't the angry DA?
Oh, no, he was
he
very
was
happy. Counting all the cash all by himself and pocketing, out of the $8,000 of maybe petty cash he was getting for the day, he was distributing 2, pocketing 5. Distributing 2, pocketing 5. Until I came along and I had to take over his work while he was on vacation. I saw like drawers and drawers full of petty cash documents, with petty cash check requests with no receipts. He took the place for about $6 million.
What?
$6 million.
$6 million.
Over a period of about 12, 15
That's a lot of petty cash. Just to protect yourself, insist that the executive director opens the bank statement every once in a while.
They do it in my agency.
Very effective tool, but very dangerous tool called the company credit card. Company credit cards that are used to purchase airfare are so dangerous because the airfare was purchased on the credit card. You have no idea if the person actually flew. You have no idea if that actual ticket was exchanged for a lower fare ticket and the person kept the difference. You don't know if they rescheduled, bought another ticket, submitted that one, but kept this one. I mean, so much stuff can happen. So if you're using a company credit card to purchase a ticket for someone, that should be called an advance to that person, just like if you had issued a check to them. And then they're responsible to give you the boarding pass. That's the only way you know someone was on the plane. An itinerary doesn't do it. You can get corrected itineraries as many times as you ask for them. So you need the boarding pass.